Microbreweries propping up across the country, a phenomenon that was largely confined to Bengaluru and Delhi for a long time. Newer brewers, including one player from Bhutan, has also made it to the Indian beer market. What does that do for one of the country's oldest and most prominent brands, Kingfisher? And to put the quarter into perspective as well, joining us now is Shekhar Ramamurthy, the MD of United Breweries. Shekhar, so good having you. And I want to start off with that big picture first before we get to the quarter as well. Good morning, Neeraj here. The last time, not the last time really, about a year and a half that we spoke, you had given me this line that no matter what happens to smaller companies, United Breweries will either maintain or better market share because the large will become larger. There is a lot more competition right now. Some has fallen by the wayside, some new entrants have come in. Are you still as sanguine about the prospects?
Morning, Neeraj, and good to be talking to you too. Yes, we are still the market leader. We're again adding shares. But as you rightly said, competition in the space is growing. And competition is not just the big, large international brewers. It's also at the top end, at the smaller level of competitors who are coming in, and brew pubs or microbreweries, as they are called, are mushrooming across the country, and it's no longer just Gurgaon, Bangalore. It's Pune, Hyderabad, Mumbai, and many other cities. Of course, you also have the new entrants coming in this wheat beer category. So all this, the way we see as United Breweries, and I'm sure all the other participants, large participants in the beer space, we see this as helping develop a beer culture in the country. We are, as we have spoken in the past, largely a liquor, spirits, whiskey country. So all these phenomenon rising of the increase in number of brew pubs, new entrants, all help in creating greater buzz and greater activity in the beer space. But we are reasonably confident and about our own prospects. We too have added many brands. We too have launched our own wheat beer called Kingfisher Ultra Wheat Beer. It's currently available in Bangalore, Goa, and it will get launched in other cities as we go along. So yes, we are quietly confident, but we do acknowledge that the competitive space is far more hectic today than it was earlier.
The KF Wheat Beer, Ultra Drought, as well as the export cans. A lot of launches from your end this time. Just wondering, one more question on this whole volumes picture, Shekhar. I see a number of statistics comparing the Indian consumption of liquor at large, not just beer or not just whiskeys, but liquor at large, and how underpenetrated it is. And yet, quarter after quarter or half year after half year, we don't see volumes expanding so much. Was it? If it's an underpenetrated country, why is it that volumes taking so long to expand? And will there be a bit of a J-curve effect that could come into volume growth at some point of time?
Well, you're right. And in our space particularly, we are hampered by the policy framework. As you know, alcohol and especially beer is highly regulated. We are a state subject, so we are subjected to state government taxes and tariffs and restrictions in every state. Prices keep going up, not because we put up prices, but because state governments keep increasing taxes. So year on year is almost a 5 to 10% increase in prices. So that's a big dampener on the category. Price of beer vis-a-vis price of comparable spirit brands is much higher because tax per liter of alcohol and beer tends to be higher than on liquor. Plus the sheer availability. The total number of outlets where you can buy a beer, either buy or consume a beer, is between 75 and 80,000 across the country, as compared to any FMCG, which would be in millions. So that's a big dampener. But having said that, in the long term, there will be growth. It will not be dramatic growth. We will grow along with the country's growth. So the future is interesting, but it will not be exponential growth.
Okay. For the third quarter, Shekhar, volumes declined 7%, but realizations surprisingly strong at about 7%. How does one try and gauge what could happen in maybe quarter four or for FY21? Any sense?
Well, all of 1920 has been challenging. Starting off with the fact that the overall economy has seen a slowdown. There are elections in quarter one which hamper our business, and for beer, quarter one is the largest part of the year. We are hopeful that going forward, there will be a easing in the overall industry in terms of growth coming back slowly. However, having said that, we see overall 2021 growth again being reasonably muted, largely on account of the fact that a large market like Andhra Pradesh has put in place a policy which is very adverse. They have reduced the number of outlets, they have reduced the hours in which outlets can operate. The entire trade has been taken over by the government. Prices have gone up by over 20%. And of course, there is an ordering pattern which does not seem to be basis numbers and rationale. So there is preferential ordering for some of the local players. So Andhra is going to be a big dampener. We've already seen starting October industry having declined over 50% in Andhra, and we don't see that improving. But outside Andhra, we see modest growth in 2021. The comparators vis-a-vis 1920 will be easier. So we will see a little bit of growth in markets outside Andhra.
Okay. So two-part question roll into one. If I look at the next year, would it be safe to assume that at least what you showed in Q3, which is the heartening part, which was the margin, the performance, can that be replicated or extended into the next few quarters? And because of the favorable basis, I think, as I read a report which says that how for FY21, both in Q1 and Q4, there was an election impact that came in, and therefore there will be a favorable base there, would probably help your performance, if anything.
Well, in terms of comparators, it would. There's no doubt about that. As you have rightly said, the comparators of this Q4 and Q1 of 2021 will be easier. In addition, we don't see such steep inflation in input costs over the next few months, because this year we've had steep increases in price of bottles and barley. We don't see that happening to that extent. So even the cost pressure would be less. So yes, all things considered, unless, in our business, you can never be very, very sure, unless there are some really adverse policies announced by some key states. 2021, in terms of comparators vis-a-vis 1920, will be easier.
Well, I know the media business is unpredictable. Yours is probably a lot more, Shekhar, so I wouldn't want to trade places with you, but all the best for the quarter ahead and the year ahead as well. Thanks for speaking to us today.
Thank you so much, Neeraj. Thank you.